we're going to do something a little bit different here in this video. We're actually going to be talking about defending positions. Now, no matter what you use for your assumptions, no matter what tools or resources you are going to take into consideration when trying to adjust or actually just get out of a position completely, that is up to you. So the first way we're going to defend a position is going to be just go ahead and closing it, right? So no matter what percent profit loss or target you're hitting, no matter what your support and resistance are, if you're using net flow, it's switching against you. No matter what you're using, that is completely up to you, right? So that is the first step, is to figure out what is that imaginary wall, where's that line in the sand that you say, okay, I cannot take any more losses, I need to adjust a position here, right? And in this video, I guess I should have specified, we're only going to be talking about adjusting long calls and long puts right here. So whenever those go against you, how are we going to adjust those, right? So the first way is just to you trying to figure out where that imaginary line is that you had enough and you're just going to get out of the position completely and sell it. What you don't want to do is you don't want to stay optimistic on a position that is negative, right? So just because it pulled back and it V-shaped, a V-shaped recovery happened about 2 weeks ago doesn't mean that that's going to happen again. So don't be sitting around hoping and praying for some sort of gap up, some sort of Trump news that is just going to put you right back to break even, or just even close to it, right, to get your money back. That's not, that you do not want to do that, right? So the best options traders are always going to be making the fastest decisions, not necessarily the best decisions, but they are going to make fast decisions, and it's going to have it's going to allow them to live for another day. There's always going to be opportunities. Just because you missed one doesn't mean that it's over, right? You're never going to see that ever again. There's always going to be opportunities in the market. So that's what you do not want to do. So the first way, again, how to defend a position, just go ahead and have a imaginary line in your head or whatever tools or resources you are using, and saying, hey, I had enough, let's get out. Now, the second and third ways that we can actually defend a position, so in this example, we're going to use our Tesla calls in here, is actually selling an out of the money call or further out of the money call against Tesla, or you can actually sell a closer to in the money call against your position, right? So for example, we're going to be looking here at Tesla. Let's just take these 420s. For all intents and purposes, we're going to say, hey, we bought these 420 calls when they were sitting at 580. Our delta was probably like at 40 then, and we said, hey, we're going to buy these 420s, and then the stock kind of went against us. Well, now all of a sudden we are down $100 in here, right? So we bought them at 580. Now we're down here trading at 480. What can we do? But we still want to have a bullish bias in here, right? We still have time. You still have about a week in here left. So let's just say we still think that Tesla could possibly go up and hit that 420 area, right? So what we can do is actually we want to reduce our cost basis, but we still want to participate in the move. So what you would do is you would come in here and you would pick a further out of the money call and you would sell that against this. So what we would do in here is actually we would now create we would actually grab a credit for 350, and then that would come off of this 480 here. So that gives us 130. So now our max loss is going to be 130 in here, even though we already lost 100. So technically it's 230. But right now, the most we can lose again is going to be only this 130, rather than going ahead and losing the rest of our money in here, which is going to be the 480. We're reducing our cost basis. We're getting our credit back. We're actually getting that 350 back. So we can use that in any other position that we want. So we can actually average down again if we want to. We can go somewhere else into another area, another sector, and then play with that 350. And all we're doing is just selling this against this call here. Also, you have to notice that your deltas and your thetas have now changed. So if we delete this leg, look at our delta. Our delta is 30, so we need this to go up. Our theta is going against us now, 62. We're losing 62 bucks every day, even if the stock's not doing anything. Our delta is 31, so we're praying for some sort of move. Whereas if we just sell this, all of a sudden our delta goes down to 6. We don't need such a big move. Obviously, we still need to come up here to our break even, which is going to be 130 plus 420 right here. So 420, 130. But our theta now is only $6 against us, rather than losing that $60 plus each day. So it's not really, we're reducing our cost basis. we're adjusting our deltas and our thetas in our overall portfolio too. That's what we're doing when we're doing this, right? We're not actually specifically looking at this one position. We're kind of taking our whole portfolio into consideration. We're reducing our cost basis. We're getting that $350 back. And now we can play with that somewhere else. And yet we still have the same assumption and basically more or less the same trade on in Tesla. And all we did is just went up here and then sold a 425 call against this 420. So that is one way that you can do that. And you're still participating. And hey, you know what? We can just leave this on here. And if Tesla goes up here and gets close, then we can try to sell and make a little money on here. If not, we're going to take this whole rest of the loss in here. So, which is going to be the 130. That's still better than losing an extra $480, right? But also you have to notice that if we would have just kept the 420 on without selling that 425 and then all of a sudden Tesla rips, well, then technically our max profit with that, just that long 420 call on it was going to be infinite, right? Whereas now our max profit is capped. So the most we can make is going to be a $375 max profit in here. And that's just going to be if Tesla realizes a gain over here and stays above 425. So that is one way to keep the same assumption on, yet reducing your cost basis, adjusting your deltas and thetas, and still participating in that move while collecting that $350 back. Now we can use that in something else and then play that accordingly. The second way in here that we could adjust is going to be just completely changing your assumption. So let's just say, hey, we watched our GEX, we're looking at our net flow, everything flipped bearish. Our GEX wall is now here. Our put wall is broken. So we're going to get bearish in here. So one way that we could do that is coming in and actually selling a call that's going to be closer to in the money rather than selling a call further out of the money. So we can go ahead and sell these 415s in here. Well, now we're going to collect 650 of a credit, which means that our overall credit in here is going to be up in the 160s now. So we already lost $100, but we can actually get all of that back if Tesla stays below 415. And actually, we can make a little bit money on this while reducing our cost basis yet again. And now our max loss is going to be this 332 in here. So our buying power, it's going to be that 332. Because that's going to be our max loss in here. So we reduced our cost basis again. We actually changed our deltas in here completely. So before it was long 31, now we're -7. So now we want the stock to go down. Our probability of profit increased up to almost 70% in here. And then we also have theta playing in our favor now. So if you think all of a sudden Tesla, hey, we broke our support in here. We had some sort of bearish flip in our GEX and our net flow. Well, now we can play this to the downside in here. And actually, if the stock doesn't do anything at all, if it just stays where it's at between now and July 17th, well, then we're actually going to make all this money and realize these gains of $160 because of where our overall theta was. So again, instead of losing that 480, now the most we can lose in here is going to be the 323. And actually, if we turn this into a credit spread, it's actually easier to adjust this rather than being long position or having a long debit spread on. So again, what's going to cost us a little bit more, but now the probability of profit is in our favor. The the theta is going to be in our favor as well. And now that we are in a call credit spread because of the call skew in Tesla, it's actually going to be easier for us to adjust this. We can roll this out. We can play with this now that we have things going overall in our favor, right? So that's just two ways in here. I guess technically three ways, but really two ways in here that you can adjust an overall position without actually closing out that long call that you were in. And you can do the same thing for the puts in here, right? So that's kind of what we're looking at for defending positions in here. Let's see if you guys can take into these into consideration as you're going into this week. A lot of the times it's easier to just kind of, hey, I'm going to give up on this position. I'm going to close out. I lost 30% on it, lost 20%, whatever. I'm going to close it out. A lot of times that is easier. And then you can just take all of what's left of that, and then you can move that wherever rather than trying to salvage something. But again, sometimes you still have a good assumption that, hey, this is still going to be bullish, or you have a very good assumption that, hey, everything just switched. Well, now I'm going to try to adjust accordingly. So that's two ways. It's just going to be selling further dated, or I'm sorry, not further dated, further out of the money or closer to in the money options against your longs, and then adjusting from there. So let's see how this kind of shakes out for everyone in the upcoming week and see if you can kind of use these to your advantage. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.